think what makes us different is we're ideas based. So typically when you deal with a broker, you're given a base portfolio which is loaded up with banks and perhaps BHP, and you charge 1% for them to look after that for you over the course of the year. Argonaut's very different. Argonaut is ideas based, and our advisors live and breathe on the quality of the ideas that they come up with, and they're paid brokerage and transaction fees on the deals they do. So across that business, we have a lot of advisors that have been focused on the resource sector for a long period of time. So Argonaut has a huge lot of expertise in the resource sector, and it made sense that we build a funds management business around that to capitalise on that skill base. We established the business about 22 months ago, January 2020, with the view that we thought that Western Australia deserved a major resource fund to be based here, given the resource expertise that we have, but also the resource base that the state possesses. We've been going 22 months. I'll talk a bit about how we've gone later on, but our flagship fund is the Argonaut Natural Resources Fund. So in a market that looks expensive, we think resources looks very good, and copper is a big part of that. We see two key investment themes that will drive performance over the next decade. The first being the green energy transition. There's not many things that China, the US and the EU all agree on, but energy transition is one of those. And what we've seen over the course of the last 12 months is really that move into the mainstream. The whole decarbonisation theme, electrification, battery storage, and even more recently, uranium having a bit of a run, and hydrogen. It's all part of the key thematic that we think will run for the next decade or 2 decades. If there's a risk, it's whether there's the capacity to provide the volume of commodities that are required to meet that transition. The point I made at the outset about, we're focused on a relatively small part of the market. It's worth bearing in mind that, investors wanting exposure to energy transition really need to be focused on that area. It's, if you want pure copper exposure or pure nickel exposure or pure lithium exposure, you're not going to get it in the majors. You're going to have to go to smaller companies. So that whole energy transition, we see copper as being fundamental, but there's a number of commodities that will benefit. Nickel and lithium, obviously, some of the other key ones. The other point I'd just like to touch on is geopolitical and social tensions, and I think we've already seen a bit of that with China sort of growing its economic assertiveness, and the implications for that, we're already seeing. For example, in the lithium market, previously China had done most of the processing of lithium, whereas you're seeing a rapid rollout of hydroxide plants globally as people try and reduce their reliance. Similarly, in rare earths and a number of other commodities. The second point there is equality and social unrest and political instability, and I think you can't really look at the resource sector without focusing on those factors. And this week is a good example of that. There's an election happening in Chile at the moment, I'm not sure which candidate will be best. You've got an extreme left candidate and an extreme right candidate. Chile represents about 30% of global copper production. Peru had an election last year, and I think there's some uncertainties about what the actions will be. So I think that's going to be an emerging and a continuous trend and theme for investing in the resource sector. And again, that'll impact on commodity supply and have impacts on commodity pricing. And also means that projects that are based in tier 1 locations will gain a premium. So again, we see the commodities like gold benefiting from the uncertainty of those tensions, but then stable production of copper and nickel, rare earths and cobalt, etc. There'll be opportunities there, but also some volatility. So I touched on our expertise. I've just got a couple of photos on here, and I know George Ross is presenting later, and I think he's got the same slide, so I'll go in first, George. Sorry about that. The top three guys there are sort of senior resource analysts. You know, we think we've got the best resource team in Australia. You know, John McDonald, I think, has been around longer than almost anyone, and you know, he's a great gold analyst. Royce and George are newer to the industry, but add a lot of expertise and skill. But on top of that, and I think what makes Argonaut different is, you know, we've got guys like John Santel that sits on the institutional sales desk, who was an analyst for probably 20 years, probably been in the industry for over 30 years. And so he's a good sounding board for projects and expertise. Josh Welsh, similarly, been in the industry for 20 odd years, now on the institutional side, was an analyst and well respected for a long period of time. And then we've got Dearman and Mike who sit in the corporate area, but, you know, mining engineers and geologists. So, you know, I think if there's one message that I'll leave you today with in regards to Argonaut, is that our expertise and resources is unmatched when you look across metallurgists, mining engineers, geologists, etc. So I run the funds management business, and as I mentioned before, really the idea was to say, we've got this expertise, you know, how do we capitalise on it? So quietly we launched our Argonaut Natural Resources Fund in January 2020. The approach we take is really it's a top-down meets bottom-up approach. So we identify the commodities that we think will perform well, and then we identify the companies that will give us that exposure. So as you can see there, energy transition is currently representing about 50% of our portfolio, but can range between 40 and 60. Gold we like to have just because we think there is uncertainties around, and we think it's a good hedge against the rest of the portfolio. But it's also important to be opportunistic and to take advantage of opportunities as they come up. So we also have a bucket there that allows us to do pretty much anything within the resource space. You can see the companies that we currently own. It's probably fair to say we've moved the market cap exposure of the companies up as valuations get a bit more stretched. And then the 5 bricks analysis is really the nuts and bolts bottom-up research, where we look at, you know, valuation, management, you know, business strength, financial strength, and responsible investing, or an ESG kind of approach. So, you know, when you add, what we've tried to do with the funds management business in the early days is add process and systems, and then we match that with the expertise within the business. And I'm pleased to say that the outcome of that has been some pretty good performance. You know, in the last 12 months, the fund's up 71%, outperformed its index, which is the ASX 300 resources, by 58%. And since inception, we're up 110%, outperforming by 117%. You know, we're high conviction. There's between 10 and 25 stocks in the portfolio, so we're not sort of, you know, hugging indexes. We take a view and we back that. So really, that's all I've got to say. Welcome to you all. Hope you enjoy the focus on copper today, and you know, we're very bullish on the outlook for that commodity and energy transition more generally. Thank you.